afternoon, all. Thank you for joining us. As we get started, all of us at Ivey would like to recognize the history and tradition of the lands on which Western University, Ivey Business School, and our own Spencer Leadership Center are located today. We acknowledge and respect the traditional lands of the peoples where Western resides, connected with the London Township and Sombra Treaties of 1796, as well as the Dish with One Spoon Covenant Wampum. This land continues to be home to diverse Indigenous peoples whom we recognize as contemporary stewards of the land, vital contributors of our own academic community. We commit to renewing and building on our relationship with Indigenous communities through our teaching, research, and community service. And since we're virtual today, we would also like to invite all of you to think about the land that you share and add your own acknowledgements in the chat. For those of you who have joined us regularly for our live stream series, welcome back. If you're new to all of this, then welcome. We host this series for business leaders and people leaders in our community looking for perspectives during, what is becoming sort of a bit of a tricky time, but also a long and tricky time. Bonjour et bienvenue. Si vous avez nous joindre pour nos autres webinaires, merci. Si c'est votre première fois, très bien. On espère que vous trouvez la page aujourd'hui. I'm Mark Healy. I'm the executive director of the Ivey Academy. That's the learning and development wing of Ivey Business School here in London. Je suis le chef d'éducation exécutif à l'école de commerce Ivey à l'Université Western, c'est en Ontario. Back in the fall, we put on one of these live streams in partnership with our friends over at the Ivey Center for Building Sustainable Value. We've also had Ivey's own professor, Tima Bansal, on before. In each of those sessions, we kind of touched on some broad themes related to sustainability, circular economy theory, systems thinking, systems design. The uptake was excellent. We've had a lot of calls for us to ask to return to that area. And today we're going to go really deep in one related area, that's sustainable finance. Sustainable finance, or the incorporation of environmental, social, and governance factors, that's ESG factors in investment instruments and decision-making. It's now entered the mainstream. And I have to admit, I wasn't a big believer in that. I actually had to have a background or prep call with an MBA colleague of mine from back in the day, just to get up to speed on the topic today. But in Canada alone, ESG related assets have now reached over $3 trillion, representing growth of 48% since 2018. We've had Larry Fink weigh in on the matter, and so today we're going to get into all of that. And we're really fortunate once again to be joined by an absolute all-star panel. So here's who we have with us today. We've got Andy Chisholm. Andy's MBA 85. He's a prominent alum of the school. In fact, he chairs the Ivey Advisory Board. He also serves on the board of directors of Royal Bank of Canada. He's a member of Canada's expert panel on sustainable finance. We have Michael Jantzi with us. He's a CEO of Sustainalytics, which is the largest independent provider of ESG research and ratings to investors, and sits on the board of directors of the Sustainability Accounting Standards Board, that's SASB. And we also have Ivey's own Diane-Laure Arjaliès, assistant professor of managerial accounting and control, general management and sustainability at the school. That's a cross-disciplinary appointment. It reflects her research and her teaching. She aims to push the boundaries of knowledge and practice by investing how fashioning of new devices or collective actions can transform markets toward sustainability. So three absolute experts on the topic. We're looking forward to getting into it. Andy, we're going to start with you today. You've obviously spent a lot of time in finance in Canada and globally. You've got this newish role on the expert panel on sustainable finance. Maybe could you just give us your opening take on the acceleration of major players in the sector and the importance? Why is this a big deal for business leaders in kind of all sectors?
Yeah, great. Thanks for including me in this. And it is a subject that I feel very, very strongly about on many levels. For a long time, I think a lot of these issues were sort of viewed as CSR issues, a little bit fuzzy, non-financial, more checkbox in some characterization. But the last few years, I think there's been a very significant inflection that's occurred. And for a whole number of reasons. One is people are starting to wake up to the fact that these changes represent real risk and real opportunity. That as values-led organizations, and a lot of organizations are wanting to position themselves in that manner, as values-led organizations, these are central to being able to execute effectively against that. And that COVID, in many ways, far from being a distraction on some of these issues, has been an accelerant. And so when you take a whole series of things evolving, you realize this is starting to be very meaningful with regard to capital flows, affecting costs of capital, affecting share prices. Societal expectations are really, really shifting fast. Even at the highest level, what is the acceptable face of capitalism is starting to shift. But even at a more micro level, for financial institutions sitting at the nexus of the economic system and capital allocation generally, they're under enormous pressure and high expectations that they are operating in that nexus in a manner that society is going to be happy with. And investors equally have moved very hard and very fast, like you alluded to. And it really is starting to affect cost of capital in some areas. The energy patch would be one of the more easily recognizable of those. And together, taking climate together with the broader environmental issues and ED&I combination of very important issues, it represents a huge number of the shareholder resolutions that companies are getting at their AGMs and the more informal interaction that they're getting with shareholders. And then you see that a lot of companies are starting to lead the way and showing how net zero 2050 plans, for example, can be outlined. And it's getting to be a competitive issue in that respect, as well. Aspirational leaders like Fink and Bloomberg and Benioff and Gates and Bezos and others are setting the tone. You get Biden, and a change of administration massively changes the game in many levels. And so you get that big observable shift in corporate sentiment, corporate behavior. You tie it to societal expectations. You tie it to the macro, for example, on climate change, where Canada has got a very long position on carbon and the world is taking a big short on carbon. And we better think very strategically about how we act over the next while. And each individual actor will be held to that standard. But then finally, I'd say a number of the other stakeholders are getting very, very engaged. Younger talent is exercising their voice, is extremely focused on these issues, and there is huge competition for talent. Regulators are showing meaningful signs of attention on these issues. Michael will talk about the tools that are rapidly advancing in these sorts of areas. So all of a sudden you start to realize, yeah, this isn't CSR in some amorphous sense. This is about competitive advantage and opportunity and risk, and where does the economy go, and what's my position in it, and so on.
You already touched on Fink and Bezos and Gates and others. Fink has gotten quite a bit of press with his letters to CEOs lately. He's kind of got an analysis about a significant reallocation of capital coming. Just like your take on, or your reaction to that.
Well, I strongly agree with a lot of what he's saying. I think, and I give him an enormous amount of credit for showing courage and leadership to express a lot of these things that others are fuzzier about. Having said that, with no disrespect, he's not a soothsayer. This is not original thought. It's simply, Michael has been talking about this for over a decade. Diane-Laure has been talking and writing about this for a long time, but he's got a $9 trillion voice and a huge amplifier in areas, in groupings like Climate Action 100, that's now 50 trillion, I'm sorry, his voice, 9 trillion. Climate Action, 50 trillion of assets represented. And so these are big, big voices. But the things he's talking about are very important and relevant. Sustainability should be our new standard for investing. Why? Because it leads to better risk-adjusted returns. And you've got to integrate it into your processes, not just have it as somewhere out on the periphery, an add-on somehow. But equally, he's saying it's going to change the cost of capital. And he's saying that the long-term benefits are going to far outweigh any short-term benefit. And he's saying, there is probably a historic opportunity in transition around things like climate change, and those that get positioned to take advantage of that historic opportunity will be the new winners, and those that ignore it will do so at their peril.
Well, I want to stay with you for one more question. You're fortunate to be involved a lot in Canada on this topic. The federal government's got a new Sustainable Finance Action Council. Do you see that entity being able to take advantage of the momentum? And I don't know if you have any commentary on sort of how it's set up in the direction that they're thinking about going.
Yeah, they're about they're close, I think, to coming out with details around that, including members and including the mandate and the organizational structure and so on. And I think it will be able to take advantage of the momentum, because what we're seeing in investing markets, what we're seeing in terms of corporate behaviors, what we're seeing in terms of the increasing consistency of government commitments around net zero 2050, for example, and the fact, by the way, that it's not just 2050, like we have to be 50% down by 2030, and that's around the corner. And so I think all of a sudden there are a lot of things aligning, but some of the very important aspects to this have to do with disclosure. How do investors and regulators and others get the information they need? Where do people who are disclosing, how do they get the right data so they can disclose it? How do we build the consistency of application of fiduciary duty around investing related to these sorts of issues? How do we create bigger pools of competence in the accounting, the legal, the data analysis professions that Michael is perfecting in many ways? So there are a lot of these, foundational elements that are going to be critical for the capital reallocation that Fink describes to occur in a positive and data-driven manner and a real risk return mindset and process, so that it does get to the right infrastructure projects. It does get to a reallocation of capital within the real estate industry. It does get to transition in transportation and agriculture. And it does get to the new solutions in energy transition and so on, as well as helping a lot of our traditional energy players to be at the heart of some of that innovation, including with regard to fossil fuels, and doing that a lot better because we're still going to need them for a while.
Excellent overview. Michael, we want to shift to you. So Andy's introduced the idea of data, which obviously is at the heart of your business and business model, but maybe we won't start there. Maybe we just start a little bit higher. You've spent a lot of time in the sector, observing the sector. What's your view on the recent developments? Are they as significant as Andy's making them out to be and everyone's making out to be?
Well, yeah. I mean, if you're looking for dissonance in the early parts of the panel, you're not going to get it. There's a lot of agreement.
Wait, we'll get there.
Okay, this is not a fad. I think even people who are more recently being introduced to the idea of sustainable finance are picking that up. But certainly, for those of us that have been this a little bit longer, what we're seeing now is, I think, just an exponential increase in interest and traction in the idea, and that's only going to increase. I've spent most of my time over the last 30 years focused on the investment angle to sustainable finance, and what we're seeing there is just growth, exponential growth, unrelenting growth, the integration of environmental and social issues into investment processes is taking hold in every region of the world. This is not just a European story. It's not just a North American story. We're seeing it across Asia and Australia and other parts of the world. We're seeing just an amazing array of what I call asset class proliferation. So the integration of these factors across asset classes and sub-asset classes. So there's just a lot of innovation happening in this space. And Andy highlighted, COVID. And, when you look at the history of the growth of responsible investing, whatever it is you want to call it, it's had a history of coming out of challenges or crises stronger than when it went into them. And we saw that through the general financial crisis and others. And COVID, I completely agree with Andy's characterization that that's been a catalyst for sustainable finance, not the opposite. But also, as this panel suggests, and as Andy touched on, it's not just about the investment angle. This really is about sustainable finance. We're seeing sustainability as a key component of the entire ecosystem around capital markets, and issuers are as strongly focused or more focused on this in some cases than the investor side. And when you have investors and issuers focused on this, it means the intermediaries that serve them are also focused on it. So we've created this, sustainable finance ecosystem. And one of the reasons that I believe that we're going to just see this continued trajectory is that sustainability, as Andy again suggested, it's not just about risk, it's not on the periphery, it's about opportunity. And sustainability today is driving financial innovation. At the issuer level now, companies understand and are succeeding in raising capital with the sustainability lens on it. We're seeing new financial products, sustainability financial products into the market. We're raising capital now through green, social, sustainability, and transition bonds. We're seeing sustainability linked loans. We're seeing just a proliferation of financial product innovation as companies who are focused on that sustainability transition are able to leverage that. It's not just about a lower cost of capital. It's actually, it's associated with expanding the pool of capital that they have access to globally now because of sustainability. And so that is tremendously important. But I'll just say one thing that I believe highlights the fact that this is gaining momentum and gaining traction, is moving forward. And it's just the reality that the whole debate and discussion around sustainability is evolving and is becoming more sophisticated. Again, Andy talked a little bit about this around fiduciary duty and those types of things. But, shifting back to that sort of predominantly investor focus, we're just not having conversations about, what responsible investing is. We've moved beyond the conversations about whether or not, investment professionals should be doing this, whether you can make money doing it. We've moved well beyond those. And now it's not even about how you do it so much, but much more sophisticated conversations about, well, what type of sustainability lens should we be looking at in our integration? So for example, there's a big debate right now about whether or not the integration of sustainability means financial materiality lens. So in other words, are we only looking at sustainability from the lens of those issues that have an impact on our, as an issuer, for example, our short-term, medium, or long-term financial performance? Or does sustainable finance mean we also have to expand that lens and say, well, aside from whatever the financial materiality there might be on the balance sheet, the income statement, do we also have to take into account the impact that our operations have regardless of the financial impact in the short term? And so those sort of broader societal concerns. And so that debate, whether or not we need to, or if we're allowed to focus on that single financial materiality framework, or we really have to consider now a double materiality framework, is a really interesting debate. It's fueling the conversation. And what I would say, from an investment perspective, if the last 10 years have been about how environmental and social issues impact a portfolio, I expect the next 10 years are going to be as much or more about how investment portfolios impact the environment or the societies in which we live. And it's not one or the other. I just think you're going to see this conversation continue to unfold. And again, one of the reasons that I think you're going to hear more, not less, about this moving forward.
We don't want to spend the rest of the conversation on reporting and standards, but it is an important piece of this, and I feel like it's a good frame for the rest of the conversation. So can you talk just a little bit about, some of our audience may not be overly familiar with GRI or SASB or TCFD. Can you talk a little bit about those three standards, and then more importantly, this kind of recent move to try and amalgamate, and is that in fact going to help companies with reporting?
Yeah, so I'll move through this fairly quickly, but I do think that one of the primary themes here is that when you have investors and issuers saying that sustainability factors are critical to their decision making, and you're moving from a nice to have to a need to have environment, then the disclosure of these issues takes on a whole different weight in the conversation, and that's what we're seeing. So as you said off the top, I'm on the board of SASB, the Sustainable Accounting Sustainability Board. I'm on the board of the PRI, the Principles for Responsible Investment. Both organizations have an important role to play, so I want to make sure I'm declaring that so people have some context. But step back a little bit. Outside of those organizations, there's three major initiatives that are going on right now. So you have to start with the European Union. So the EU has a sustainability action plan. They have an EU taxonomy around sustainable finance, and they have a sustainable finance disclosure regulation regime that just kicked in initially yesterday. So from the EU's perspective, I think it's important to understand that reporting impacts both issuers and investors. It's a double materiality lens. And so from an EU perspective, disclosure and sustainability includes those issues that are both financially material or potentially financially material, but have a broader impact perspective. And it's also global in its reach. Even though I know people are saying, well, the EU is a regional initiative, I would argue quite the contrary for two reasons. First and foremost, I guess, the architecture around the EU taxonomy is built for global adoption. And the folks that are working on the EU are clearly in conversations with other jurisdictions. They want it to be a global standard. And secondly, it doesn't only apply to European issuers or investment houses in the EU. Any company that's operating in the EU, any investment house that's selling products in the EU is covered under this. And we're already seeing the effect that that's having with financial products manufacturers. They're having to shift their operations in line with the EU. You've seen the IFRS, and now very much aligned with IOSCO, which is the International Organization of Security Commissions, weigh in. IFRS, and I've been a long proponent of this group getting into the reporting game from the sustainability angle, is now in big time. We're now moving ahead where IFRS and IOSCO are saying that they're looking now from a financial materiality perspective, climate change very strongly leading that charge, and they're looking to set up a sustainability standards board. So you're seeing that play into it. It's obviously very global, but of course IFRS is not the standard that we see in the largest capital markets in the world from an accounting standpoint. So there's some questions there. And a fairly new player in the space is the SEC. So we've seen just a lightning quick and significant turnaround with the new administration on climate and on sustainability reporting more broadly. Where the SEC plays in this, I would suggest, though, for the SEC, it's not a question of if they're going to mandate disclosure in this space, Mark. I do believe they will. The timing is, of course, in question. I think it's going to be whether it's a single financial materiality perspective or that double materiality perspective. It's really interesting, too, the relationship they might have with the IFRS. Again, that's not a jurisdiction that's warmly embraced our IFRS more broadly. But it's interesting because the chair of the SEC sits on the board of IOSCO, which has endorsed and is aligned now with the IFRS standard. And just yesterday, the United States and France announced cooperation in regards to sustainability reporting. And of course, from a European perspective, that means the double materiality sort of focus. So this is a crazy space right now. As far as SASB, GRI, the Task Force on Climate-Related Financial Disclosures, all of this has meant that it's forced them to have a much closer collaboration than they might have had in the past. We've already seen some consolidation in that space. SASB has merged with the International Integrated Reporting Council. I think you're going to see some more consolidation in the space. And the thing is, with IFRS and the SEC, to this point, they've indicated that they're not looking to create new standards. They're looking to align with those groups that are already in the space, and the Task Force on Climate-Related Disclosures being a big part of that. I think you're going to see now SASB and maybe GRI, I can't speak to in the same degree, obviously, just being integrated and being very closely aligned with some of the things that you're seeing. So, you know, we're in the world heading very quickly into the world of mandatory reporting on these issues. The days of voluntary reporting, I think, are over. And it's a question of how that's going to play out, not if.
I'm sure Diane-Laure is going to have a point of view on the global piece, and I'll want to get to France and the US as well. Just one more question for you, Michael, before we move to Diane-Laure. You're in the business that you're in, right? You're kind of beholden to the quality of your research and the quality of the data. Let's assume the intent on everyone's part is good, right? Everyone's trying to do the right thing. How's the quality of the data right now?
Well, I think listen, I mean, you're going to get a biased perspective, but I think in speaking for all these firms that work in the ESG research, data and ratings business, is I think there've been vast improvements being made in the data, but obviously, I think in some cases, fairly so, critiques of what we're doing. But, you know, again, I can only speak to us. We're leveraging smart people, like from a Sustainalytics perspective. We have over 350 analysts on staff. We have large teams, you know, leveraging big data and AI, and I don't think that's any different than other players in the space like MSCI, S&P, and Moody's and others. So, you know, there's a lot of effort and money being spent on getting the right information, getting through that information, and getting the insights out of that information that lead to actionable, meaningful, and impactful decision-making on behalf of our clients. But there's no question that one of the real challenges has been that, unlike financial analysis, there hasn't been a comparable, consistent data set that's disclosed on the issues that are important to us and our clients. And, you know, from a financial perspective, you have GAAP, you have IFRS. That's what we need here. So that's the direction that we're heading. It's very exciting. I think that is going to go a long way, because when people talk about the quality of data, that can mean a lot of different things. I think when people talk about that, or the critics talk about that, it means in many cases that ratings between, say, a Sustainalytics or an MSCI or an S&P on the same issuer can differ. And listen, if you're arguing for 100% alignment in ratings, I think that's a bad outcome. I think that's a terrible outcome. So you're never going to get me on side with that. But there's certainly no question that some of that differential is driven by the fact that the disclosure isn't good enough. So we're forced to build models, estimation models, and all that sort of thing. That's a bad situation. So certainly getting this mandatory disclosure, a consistent, verifiable data sets globally, I think that's going to go some way into alleviating the critiques around data quality. But it won't, I expect, quell some of the conversation around why MSCI, Sustainalytics, and S&P might have slightly different takes on the same issuer.
Sure. There we go. We've got a little dissonance. Excellent. Diane-Laure, we want to bring you in now. You've you've got a research perspective, you've got kind of a global perspective. I'd like some opening comments from you, and if you do want to weigh in on the development from yesterday with the US and France, I'd love to hear about that too.
Yeah, so bonjour, thanks for being on the webinar today. So first, it's not a fad. We were talking before the seminar, MBA students tend to be clever and invest in the future. And 2 years ago, I had more students in sustainable finance than there were in derivatives. And so it shows that the MBA students and the core of the mainstream is investing into sustainable finance. It's not for the triagas anymore. And there's a huge interest among our students, among the business schools themselves. It's really, really core. So just derivatives are great class, great colleagues, but it shows that it's also key. So I think in terms of, we're asking also the most recent global development, and from a global perspective, I think I want to insist on 3 dimensions that for me have been really key. First, everything that Andy and Michael said, I agree with this, so I'm not going to repeat that. I'm just going to insist on maybe 3 dimensions. The first dimension is the discussion about fiduciary duty. So for a very long time, people argued that we could not invest in ESG because it was reducing the investments universe, and so it was increasing the risk according to portfolio theory, okay? And that was the main argument. And then they said fiduciary duty, you have to provide a good financial performance, so not included ESG criteria. I think this discussion is almost over, and there are key arguments about that. First, because diversification doesn't work that well anymore because we're having systemic risk, climate change, pandemic, biodiversity crisis. So the world is really, really integrated. And so it's really difficult for you to hedge your risk by going into another country or another industry because you need some sustainable development. So that's the first argument, that diversification across countries and industries is difficult to achieve. But the second argument, which is maybe even more interested, is that we have this concept of universal ownership. So if you're a large pension fund, you have so many assets, you're investing in the world, that whatever you want to do and achieve, you're gonna internalize the externalities. So if there's some pollution somewhere, it's gonna cost you, even if you're not invested in this country, even if you're not invested in this factory, your touristic investment will be impacted. So this notion of ESG criteria and sustainable finance is kind of key to the fiduciary of investors, is that you have to take into account those risks and those opportunities if you want to make money over the long term, because the way we're going to create value is different. We no longer create value on the market as we used to do in the 70s. This is not the case, not even in the 80s or 90s, and not even the year 2000. We have to be clever as investors. And so this concept of universal ownership is quite interesting, and somehow question the entire discussion about fiduciary duties. That's the first thing. And if people are interested, there's a great report on the Principle for Responsible Investing website about this concept of fiduciary duty in the 21st century and about this concept of universal ownership. That's the first, I guess, recent global development. The second trend is this notion of impact. So increasingly, investors are being requested to monitor the impact. So it's not only the input, it's not about, did you take it, and I saw in the Q&A and in the chat some questions about, could we invest in fossil fuel and still build sustainable finance? Yes, we can, but as an investor, an asset manager, as an asset owner, it's not only about whether you took into account those criteria, is what did you achieve through those, And I think it's the next generation of the reporting and the impact metrics. And this is a really big global development as well, and really huge as well in France, in the regulation, in Europe, but also it's coming here, I guess, in Canada and the US. And the last development for me is, and also this echoes what Andy and Michael said, is that we are facing an investment into the transition of the capitalistic system. So not only about the green economy, the green energy, but also in terms of diversity and inclusion. So we're having the Black Lives Matters movement. What is the Black community, the Black entrepreneurship, the indigenous businesses? So how can we now reallocate the capital towards the next generation of capitalism, the next generation of reallocation of capital, not only from a green space, but also from a social need. And then that's a really interesting development that we've seen, and I think it's going to keep growing in the future.
You spent a bit of time digesting a recent report, and you practice here in Canada. Do you see a future where Canada can carve out a leadership position in this space?
I hope so. I moved from France here to develop the sustainable finance track at Ivey. So if I made a move, I hope it was an informed move and clever move. So yeah, hopefully I'm believing in the future of Canada as a leader. I think there are really good strengths in Canada, and again, from our European perspective, I can speak towards this. I think Canada, when Canada decides to do something, they go fast. And they know how processes work. They just like go scale mainstream, and it's working well. In France, for instance, we have great ideas, but implementation is a bit confusing at times. But Canada is really good at implementing and mainstreaming. So I'm confident that as soon as Canada, and I think things are moving fast now, and Andy spoke about that, the expert panel and all this conversation. We're also talking with the CPA right now, and they're working about the new curriculum for the teaching of the CPA. And they want to include sustainability into it. So I think it's moving on different dimensions. So I'm confident that it's going to go fast when Canada decides to go and make it a priority. The second strength of Canada is, I think, that the ability of, for instance, working with different stakeholders, working with blended finance, public and private investors, working with some diversity and inclusion. That seems a good strength of Canada, and it's going to be really valuable for the next generation of investments and the next generation of capitalism, because this is where we have to go, and this is where the world is going, to have a more inclusive, diverse capitalistic system that redistributes value in a way that benefits the collective, and not only a few people at the top just attributing those value. And the third thing as well, and it's not the last thing, is Canada is one of the most important countries in terms of natural assets. So we're having the pandemic is a huge crisis, climate change is a huge crisis, but the biodiversity crisis we're going to have in 10 to 15 years is going to be dramatic. The impact of the biodiversity crisis or our society or the ability to function will be really, really huge. And so Canada is really well positioned in the world because it has a lot of natural assets, a lot of water, a lot of green infrastructure, and this is going to be a really, really key asset for the future. So I think this is where Canada could really lead on sustainable finance, because they have really a lot of good strengths. But for that, Canada needs to speak up and be more involved into the international conversation, be more involved in the discussion right now when it comes to reporting, and be a bit more vocal.
We may be better at natural assets and processes and scale, but we are not better at coffee and eclairs. And the French we can all agree on that.
French are really vocal, so they know how to speak up. That's why also they can speak to the US. They're really vocal into the European regulation as well. So that's one of the strengths. But Canada has really good strengths, process, seriousness. Just a bit more vocal would be great.
One more question for you. I think we'd be remiss if we didn't get into your research a little bit. You do research on financial instruments. Can you just talk a little bit about your research, and is what you're doing kind of ahead of where we are now, or is it on track? Like, how does it fit into this mix?
Yeah, so at Ivey, the goal is what we do is, we do some research and development. This is our job. So our job is to try to invent what will be the financial instruments in 10 to 15 years. We're like the Google of finance. This is what business schools should do and researchers should do. And so right now we're working with a team here. We're working on what we call conservation finance. So one of the key issues we're going to face in 10 to 15 years again is the biodiversity crisis. Canada committed to have 30% habitat coverage on the lands, and this is essential to be climate resilient. So let's imagine your portfolio, your investments is like a house. So everybody wants to have some rental for your bedroom. So everybody wants to own a bedroom, okay? Because then you can rent to a student and you have some cash flows over time. But nobody wants to invest in the foundations, and if the foundations are not safe or the foundations are not healthy, all your bedrooms gonna collapse. And so conservation finance is about the investments in the foundations, an investment into the green infrastructure. So for instance, when you have flooding, you cannot function, like your factories are on hold, it's really costly for the farmers, your tourism cannot go. And so the conservation finance is how you can invest into the green infrastructure with some new financial instruments in a way for the portfolio for all the investments to work together. And we're working on specific instruments like conservation impact bond, which are a blended finance instruments where we have both public and private actors. And the goal is to restore ecosystems, but ecosystems through the city, ecosystem through the farming. So it's not investing up north, it's investing where we are in Toronto, in Montreal, in Vancouver, to be sure we're having a healthy habitat and a healthy system and ecosystem to keep thriving as society. So this is what we do right now.
Okay, excellent. Thanks for and thanks to all of you for kind of setting the table here. We had a few pre-planned panel questions, but Sean, I feel like with the questions piling up in the Q&A, I kind of feel like we should go there. Are there any that are bubbling up that you think we should get to right away?
Sure. There is one question actually about, it mentions China as a very, high profile example of what the question is asking, but I think the spirit of it is, how will these pressures impact multinationals who rely on significant ties to countries and governments with not just questionable records on human rights, but sort of unsure future outlooks?
Andy, do you want to go first?
Yeah, it's a great question. It's a complicated question because there's a lot to it. But let's just take China, for example. China is in my humble opinion, it's in a position right now where it's operating on many different facets of the prism here. And at the one hand, it's still investing heavily in coal-fired power plants. On the other hand, it's saying to itself, we are going to dominate electric vehicles. We're going to dominate batteries. We're going to dominate rare minerals that go into batteries. We're going to dominate electric transmission. We're going to dominate solar. We're going to dominate wind. And when I say dominate, it's like right now they've got positions between 30 and 60% of global market share in some of those things. And they're saying, holy cow, I can't believe this opportunity that has been given to me by the stalling of other people. I can be Henry Ford, Thomas Edison, on and on and on as these things get reinvented. And it's being handed to me because I'm able to act in a more determined and focused and strategic manner on some of this stuff where the ball is going to. So they're playing in multiple dimensions, and their market is so big that obviously it's very difficult to just say, I'm going to ignore them for the, if they don't improve on the bad stuff. But I do think that there will be potentially very important global alliances that will be putting pressure collectively on China to deal with the things that they're unhappy with, which include, really acting on their net zero 2060 commitment and making it real, but also with regard to some of the other social aspects to this. So it's a fuzzy answer saying, somebody can stand on principle, but be shut out of a massive market. I think the reality is, bit by bit, trade pressures, competitive pressures, and regulatory advancements, China is not going to be exempt from these if the world decides to work collectively on these issues. It is if it's bilateral, because they're bigger fish than just about anybody else. But if it's collective discussion, then I think they will not be exempt from the changes necessary. But don't misunderstand. They are seeing some of these changes and seeing enormous opportunity, and they're seeing it before other parts of the world are.
I want to get to a couple of other questions that have come in. Joan Falk has put a few questions forward. One of them was a question that I had last week, which is, around the, if E, S, and G are the kind of the three letters in the acronym, it feels like E and S are dominating right now. Where is G in all of this?
Maybe I'll just quickly weigh in on that one. I mean, it's ironic because if I've been doing this for 30 years, probably for 2/3 of that time, it was not just dominated by the G and governance. It was the only thing that was talked about, and then it was E, and I would argue that S has only recently attained equality with those other two amidst the pandemic. To be completely honest with you, it's only because of COVID-19, I think, from my perspective, that we've seen an elevation of diversity, equity, and inclusion. And that human capital conversation get the stature it deserves, and quite frankly, the human rights issues that are very closely aligned with supply chain, which is an element that Andy just touched on in regards to China, for example. So, I mean, governance is there. I mean, I think maybe the reason that people don't think about it so much is that governance as part of investment decision making has been like literally mainstream for probably 20 years. And I think that, when you think about Canadian leadership, I do think that it's one of the things we can point to. I think our pension system is a well-governed system. I do think that there were some leaders in our pension community that took corporate governance seriously and not just set very high standards for governance in the Canadian situation, but we're a model globally. So I do think governance is very much a part of the ESG equation, and not just as a single pillar. I think part of what all three of us have been talking about, whether from an issuer perspective or an investor perspective, these sustainability are now risks and opportunities that need to be managed and understood. Those are governance issues. I mean, those are things that need to be understood, evaluated at the board level of an organization, and they have governance responsibility. So it's not just governance narrowly defined, it's governance of the business, and sustainability is a part of that from A to Z. So I think it really depends on the lens with which you define or look at governance.
Diane-Laure, do you want to come in on this question from a research perspective or your own perspective?
Yeah, I'm gonna just elaborate on this question. I've seen a lot of questions in the Q&A about diversity and inclusion, so I think it's also part of this question. So, first, a well-managed company is a more performant company. Like that's the key point. And so governance is maybe it seems like it was not that spoken about over the past year, but it's key. I think it's already quite assumed to be key. When it comes to diversity and inclusion, I think there are a few things to be said here. And I think I agree with Michael and Andy. The COVID crisis did raise some questions, for instance, about the fact that women got expelled a bit from the businesses and the corporation because of the homeschooling, for instance, or because of some racial communities were more impacted by COVID compared to others communities. So that there have been some questions about this. So I think diversity and inclusion is important on different dimensions. First, it's important because as a society, like which society do we want to have? Do we want to have a few benefiting and a lot not benefiting from the society, from the system? So that is first an ethical and social and human questions. But from a very sustainable finance economic question is that if you don't tackle those questions, you're basically not answering what the needs are. You're not answering to the needs of what the society is, but also you're not answering to the needs of the new generations we're having right now. We're really, really concerned by those questions of, our students and women students and minority students. They want to be part of the system. They want to be part of capitalism. They want to invest. And one of the issues we have is that we have designed a system for historical reasons that tend to favor some who know some language, some who know, wherever they have access to capital. This is one of the key issues, that if you have access to capital, then you can benefit from more capital and you can invest. So there's a virtual cycle here. But if you have no capital from birth, that becomes a big issue. And you can read Thomas Piketty, the famous economist who wrote about the capital in the 21st century. So I think sustainable finance and diversity and inclusion is also targeting those questions, is that how do we make capital accessible to those who have been excluded from the markets traditionally? And this requires, for instance, when we're going to have VC, the research shows that for VC funds, the investors tend to put money only towards I will say some males and some typical males, that exhibit some features of success and ambition. And women tend to be, for instance, more cautious in terms of setting and targets. And as a result, the research shows they attract less funding. We have the same issue with indigenous communities, that they don't always know how to pitch investors, So I think sustainable finance can also work about this allocation of capital, the way we also evaluate like entrepreneurs, the way we assess the distribution of capital and evaluation. So I think this is also a governance question, and it's going to be key, and it's going to trigger so much changes and also so much wealth, and so why not doing it?
We would have a pretty broad range of folks tuned in today. Certainly some of them would be retail investors or would just be very interested in this space. If for someone who's looking to kind of get going and get a little deeper in the space, who should they be reading? What should they be reading? How should they be trying to bring themselves up to speed in a kind of responsible way? But please, anybody on the panel, please.
Well, I'll just start very quickly and just say, I think, just reading the mainstream financial press is going to provide you with a lot of information, but I would put a plug in for the Responsible Investment Association, which is a Canadian organization. It was founded in 1989 to be, the industry association, the source of information on responsible investment in Canada. I think it's a terrific organization, and it's done great work for a lot of years. It brings in professionals in the industry on the retail and wealth side, all through the institutional, individual investors. And it's a good starting point for anyone who's interested to go for a first look. I also think, again, this is a plug for the Principles for Responsible Investment. Diane-Laure mentioned it. It's a great source of information. So those would be just two I would mention that would be a good start.
The one thing I might add is once you find, once you commit yourself to try to understand more, and you do start to read these documents, it leads you to another one. And then when something flashes up on a news feed about something, a new development or a new report, it means something to you. So you stop, you understand it. But equally, the number of seminars or different sessions that are occurring on a weekly basis are unbelievable. I mean, it used to be once a month, there would be a relevant kind of seminar on a virtual basis. I'd argue it's more than one a day these days that are available from all sorts of different bodies on individual topics. And once you get started into it, you won't have trouble. You'll have trouble turning off the tap rather than turning on the tap.
Diane-Laure, where would you point folks out there interested in bringing themselves up to speed?
So I think retail investors, you should speak to your financial advisor. Like, I mean, you all have assets and you all invest in the markets. And so maybe look at what your investments are, where they are, and how do they respect some criteria that might matter to you, whether there is systemic risk, where are they in terms of climate change. So what is super nice with finance is that we're all investors, whether it's through our retail investment, whether it's through pension funds, or even our insurance premiums. So I will encourage everybody to look at what they do with the investment, because they have a lot of impact. And so if you're shifting to organic, you try to buy a Prius or a nice car, like look at your investment, you can have a lot of impact here.
We're just a few minutes from the end. We're always up against it on time. Sean, is there anything else from the Q&A burning that we should get to before we do closing comments?
Well, we'll definitely collect some of these extra questions and see if we can address some of them in the follow-up article that we'll send out along with the video recording. There is one question here that might be a nice sort of way to tie things off. The question is from audience Mark. With millennials coming of age and representing a large voting bloc and consumer base, what advice would you impart on younger generations to ensure that we create ideal societal conditions to build back better in a way that balances ESG and financial returns?
One thing that I would say is you have a really rare opportunity to become expert fast on a relative basis within any particular profession that you'll be pursuing. Why? Because the older guard was not trained this way. The older guard is not aware. Their patterns and behaviors have been set in a different direction. So the ability very quickly to become a master of some of this stuff as it relates to very individual tasks and functions and job descriptions and so on is huge. And so that, combined with the knowledge that there is a huge competition for talent, so therefore within the reasons of pragmatism and so on, being vocal and being able to find new positive ways, not just complaining about what's wrong and broken, but finding the new positive ways, you have enormous leverage these days to be able to pursue those paths and quickly to be leaders of those paths. So it's simply to say, you've got a great opportunity, in part because our generation doesn't know enough about this stuff and was trained on a different basis, but you've got to stand up, have a voice, and be action oriented and not focus on what's broken, but figure out where's the solution.
Can I pick up on that? Because it's that action, vote. And I don't mean just vote in elections, vote with everything that you do. Vote for putting this into your decision on where you're going to work and ask questions. Vote on where you decide to spend your money, products. Vote on where you're going to spend your time through community involvement and philanthropy. Vote in regards to how you're going to invest your money. So it's really, those are the actions you can take, and all building on what Andy said, but those send signals into the market that are exceedingly powerful.
I think there are so many folks of my generation that say, I sort of get some of this stuff, but I don't know how it relates to my day job. I think it is the younger generation that are going to figure out how does it relate to the day job, and that's going to be tremendous for them.
Diane-Laure, a final word to you, please.
Yeah, I think this forthcoming generation is absolutely amazing. The students, even through COVID, have shown so much resilience and innovative ways of dealing with this pandemic. And they start to be bold and really invest in those questions as well. So I'm really optimistic. I really, really appreciate the next generations coming.
Thanks to all of you, and thanks to everyone who tuned in. Sean, can you wrap us up, please?
Absolutely. So we'll be sending out an emailed link to the full live stream recording on our YouTube channel within the next few days. You can also follow us on your favorite social network to get notified of all the latest content. Thanks for joining us. Thanks for all the great questions. And Mark, I'll just send it back to you quickly.
Thanks, Andy. You're a good man. You always do right by Ivey, and you always say yes. Thank you. And Michael and Diane-Laure, thank you so much for your expertise and spending the time. To everyone who tuned in, I appreciate it. And we'll see you next time. Take care.